stock markets, the S&P 500 and the TSX Composite jumping to new record highs today on hopes of interest rate cuts this month on both sides of the border. There are some stocks that do stand to benefit, in particular from lower borrowing costs. We're joined by Phil Young, portfolio manager at Cidel Asset Management. It's great to see you. Thanks very much for coming on the show.
Thanks for having me.
Just talk to us about these job numbers. I mean, weak employment conditions in both America and Canada.
So from our perspective, these weaker numbers mean that interest rate cuts are likely, and they're going to be coming both in Canada and in the US. And one way to play that at this point is utilities. And utilities, they don't grab a lot of headlines. They're not flashy, but they actually offer a lot of positives. And at this point, we're seeing these companies offering strong, surprisingly strong growth numbers and a high level of defensiveness, which is useful in a market that is pushing all-time highs with risks still elevated. And then on top of that, you have the upside that comes from the build out of our artificial intelligence. All that power capacity demand means that utilities are actually going to benefit. They're going to see growth outlook starting to increase. And in fact, at this point, we've seen CEOs, and I've covered this sector for about 15 years, and CEOs have never been more optimistic on the growth outlook for their utilities.
On the electric demand.
Exactly.
15 years, you've never seen anything like it. Yeah.
No, never. It's definitely a game changer.
Because for a decade or more, we had pretty low, with deindustrialization in Canada and the States, we had very low growth in electricity
Absolutely.
demand.
Electricity demand had been largely flat for about 20 years, but now it's starting to really pick up. And I think what's interesting is actually, you can see that in the US, there's this view that electricity capacity is going to be essential for their national security. The idea being essentially that in order for them to win the AI race with China, they need to be aggressively building out their electricity capacity. And what that means from a utility stock perspective is that a lot of the red tape is starting to be cut. The government in the US is really working hard to try and speed along the process of these infrastructure build out. And that's another positive we see for these stocks.
CMS Energy is an American idea you have for us. They're based in Michigan. What attracts you here?
Yeah, so for CMS Energy, which is almost entirely operating in the state of Michigan, this is a company that is the absolute gold standard when it comes to consistency. This is a company that for the last 20 years has beat expectations on growth, for earnings, for dividends. And on top of that, they have one of the best management teams in the industry. And the state of Michigan itself is actually highly supportive of their utilities and the build out. And what that means is that you have limited chance for negative surprises. So when you're investing in utility, when we look for utilities, we don't want to see something that we're going to wake up one day and there's going to be a change in the rules, which could hurt them. We want to see something that's consistent, something that's very easy to sleep at night. And the Michigan regulator is an absolute star in the U.S.
A yield of 3%, so not a massive yield. Do you know offhand, have they been increasing it regularly at CMS?
They have been increasing their dividend, yes, every year for, I think, 19 years straight now. And their growth it's pretty solid, too. It's in the high single-digit range. And this is a company that's still guiding for EPS growth to be 6 to 8%. And usually on the high end of that, that's where they're telling their investors to expect. And what that means is that you have a stock here that can easily exceed a total return of 10%.
I'm just looking at a story here on CNN that U.S. President Donald Trump promised to swiftly cut electricity prices in half. However, CNN says, in fact, in America, those prices are rising twice as fast as inflation. So presumably there will be political pushback on that rise in electricity prices.
Absolutely. There's definitely going to be political pushback. But at the same time, the government has to balance the need for this build out with building power capacity. So if there is heavy investment in utilities for infrastructure projects, there is the potential for consumers to pay more. But at the same time, they need that development. There is no way that the U.S. is going to win the AI race unless they have investors incentivized to fund utility investment in electricity capacity.
Fortis is a long-standing Canadian utility. You like the look of this one?
Yeah, so Fortis is a Canadian utility, but what's interesting about this one is that they actually have operations all across North America. And in particular, they are a leader in the distribution and transmission of electricity. So with Fortis, you have a significant benefit that is coming for them because the power grid across North America is being aggressively invested in for the same themes that we were talking about before. And then also, it's another model of consistency. This is a company that has delivered dividend growth for 51 straight years.
Whoa.
I had to double check that number. 51 years, yeah.
What parts of the States are they in? Do you remember?
So they're all across, but in the States, there's a lot of in the Northeast, but they have operations also in Arizona. It's a very widely diversified utility, which is a positive because it results in regulatory diversity. And what that means is, if you have one regulator in some state that is not acting as positively, you balance it out with all the other states.
Right. It's been a pretty decent stock to own. I'm showing a total return over 5 years of 60%. Versus 44% for the utility index.
Yeah, it's been a strong performer. And on top of that, very low volatility. So with utilities broadly, what you're getting is this pretty solid return and about half the volatility of the market, which is a pretty good bet from our perspective.
I forgot to ask you, is CMS, the Michigan-based crowd, are they in nuclear at all?
Nuclear is not a part of their business, but they are in coal, and they're actually in an attempt to close down their coal plants. But what's happening is that electricity demand is so high that they've been told to keep on some of their existing coal plants just because there's no other way to meet all the electricity demand that's coming.
What about the companies that are contemplating nuclear build-out or have a lot of nuclear plants? Are you attracted in general to
So there have been some names that have really benefited from this nuclear renaissance. That's not really where we're looking with utilities. We want our utilities to be a volatility dampener for our portfolio. And there's a lot of, they're usually known as independent power producers, these companies that will sell power at whatever the market price is. But we're actually looking for regulated utilities. So this means that their earnings are largely predetermined by government, a clear government formula. And then on top of that, you actually see a high level of visibility going forward. So we want our utilities to be the safest part of our portfolio, as opposed to some of these nuclear operators that might be a little more exciting.
Yeah, because you get the huge cost overruns and you get public concern, whether justified or not, about nuclear power.
That's right. That's right.
It's amazing, though. Electricity, well, I mean, we are supposed to be moving into an electric age with climate change.
That's another driving force there. Yeah, beyond the AI build-out, there's electrification that's for vehicles, for heating. All of this loads up that grid, and we just don't have the capacity right now to meet it. That's true in Canada and in the U.S.
We're tight for time. Without necessarily talking about individual stocks, but what do you think of the renewable energy players like a Northland Power or Brookfield Renewable?
So renewable energy players, we were cautious on some of the pure plays given some of the pushback that has happened in the U.S., but at the same time, large-scale nuclear development of solar and wind continues to be cost competitive and often cheaper than some of their fossil fuel-based providers. And if we are in a world where we need electricity demand, renewable energy is going to be essential and is going to be a big beneficiary.
Thanks very much, Phil.
Thank you.
Phil Young, Portfolio Manager at Cidel Asset Management.